Doing business in Vietnam. Doing business in Vietnam offers significant opportunities due to its growing economy, strategic location in Southeast Asia, and large consumer market. However, there are important cultural, legal, and business considerations that need to be understood to successfully operate in this market. Key aspects of doing business in Vietnam: economic landscape, business culture, legal and regulatory framework, investment opportunities, challenges, taxation and accounting, human resources and employment. First, economic landscape. Growth. Vietnam's economy has been one of the fastest growing in Asia, driven by exports, manufacturing, and an emerging middle class. The country has also been shifting from an agricultural economy to one that is increasingly industrialized. Key industries: manufacturing, electronics, textiles, and footwear, agriculture, coffee, rice, seafood, and services, tourism, retail, and technology, are key sectors. Trade agreements. Vietnam is a member of several free trade agreements, including the ASEAN Economic Community, AEC, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, and the EU-Vietnam Free Trade Agreement, EVFTA, providing businesses with access to global markets. Second, business culture in Vietnam. Hierarchy and respect. Vietnamese business culture places a strong emphasis on hierarchy and respect for authority. Decision-making can be top-down, and building relationships, guanxi, is crucial for success. Negotiation style. Business negotiations tend to be indirect and relationship-oriented. Trust must be established first, and patience is required as decisions are made carefully. Gift-giving. While not mandatory, small, thoughtful gifts are appreciated, especially during business meetings. Third, legal and regulatory framework. Business entities. Foreign businesses can set up operations in Vietnam through various legal structures. Wholly foreign-owned enterprise, WFOE. This allows full control of the business but requires compliance with specific laws and regulations. Joint ventures, partnerships with Vietnamese companies, which can help navigate the local market more easily. Representative offices. These are used for marketing and liaison but cannot engage in direct profit-making activities. Ownership rules. Foreign ownership in certain industries may be restricted, such as in banking, telecommunications, and some types of land ownership. According to law on investment, the following activities in Vietnam are banned: trading of narcotic substances, trading of hazardous chemicals and minerals, trading of specimens of wild flora and fauna, prostitution, human trafficking, trade in human tissues, corpses, human organs and human fetuses, human cloning, trading of firecrackers. Provision of debt collection services. Labor laws. The labor market is relatively young, with a large and competitive workforce. Labor laws are progressive, offering protections for employees, including working hours, social insurance, and minimum wage. Employees in Vietnam are entitled to various benefits, such as annual leave, maternity leave, sick leave, social insurance, health insurance, pension, etc. Fourth, investment opportunities. Why Vietnam? Foreign direct investment, FDI. Vietnam is an attractive destination for FDI, particularly in manufacturing, technology, and infrastructure. The government has implemented policies to encourage foreign investment, offering incentives such as tax holidays and reduced tariffs in certain sectors. Vietnam remains a major magnet for FDI investment because the fact that multinational firms are impressed by the quality of the country's workers, with factory wages in Vietnam less than half those in China. And Vietnam's bamboo diplomacy strategy ensures that multinational firms that set up factories in Vietnam can readily source critical components they need to produce their products from China, and then export their finished products to the US and the EU without worrying whether those exports could attract steep tariffs. Foreign direct investment, FDI, government incentives. The government offers incentives such as lower corporate income tax rates, particularly for high-tech industries such as CIT rate of 10% for 15 years, plus a tax holiday for 4 years, followed by a reduced CIT rate by 50% for the next 9 years, exemptions from land lease fees, and tax breaks for investments in designated regions, e.g., industrial zones, special economic zones, or any investment project in a rural area that employs at least 500 workers. Infrastructure development in Vietnam has become a key factor in attracting foreign investment. Over the past decade, the Vietnamese government has heavily focused on improving the country's infrastructure to support economic growth, enhance connectivity, and increase its appeal to foreign investors. Here are several ways infrastructure development is playing a pivotal role in attracting foreign investment, such as improved connectivity, transportation and logistics, energy and utilities, special economic zones, SEZs, and industrial parks, digital infrastructure and e-commerce, government support and strategic plans, logistics and supply chain improvements. Fifth, challenges of doing business in Vietnam. Corruption. While Vietnam has made strides in fighting corruption, it still remains a concern in some areas, especially in government dealings in certain sectors. Bureaucracy, government procedures can sometimes be slow, and navigating regulations may require patience. Engaging with local legal and business consultants can help mitigate bureaucratic hurdles. Infrastructure. Although Vietnam's infrastructure is improving, some regions, particularly rural areas, may still face challenges in logistics and transportation. Taxation and accounting in Vietnam are governed by a comprehensive legal framework, which includes regulations issued by the Ministry of Finance, the General Department of Taxation, and other related authorities. Taxation in Vietnam. Vietnam has a centralized tax system administered by the General Department of Taxation under the Ministry of Finance. Key taxes include corporate income tax, CIT, rate. The standard CIT rate is 20%. Certain sectors like oil and gas extraction may be subject to higher rates, 32% to 50%. Taxable income. Taxable income includes worldwide income for resident companies and Vietnam-sourced income for non-resident companies. Deductions. Most business expenses are deductible, but they must meet specific criteria, e.g., supported by proper invoices and payment via bank transfer for expenses over VND 20 million. Value-added tax, VAT, rates, 0%, 5%, and 10%, standard rate. Exports and certain goods/services are zero-rated. Scope applies to the sale of goods and services in Vietnam, including imports, exemptions, education, healthcare, financial services, and certain agricultural products are exempt. Personal income tax, PIT, applicability, applies to both residents and non-residents earning income in Vietnam. Rates, residents. Progressive rates from 5% to 35% depending on income brackets. Non-residents, a flat rate of 20% on Vietnam-sourced income. Deductions. Residents may deduct personal and dependent allowances. Foreign contractor tax, FCT, applies to foreign entities doing business or earning income in Vietnam without a permanent establishment. Consists of CIT and VAT components, calculated on a deemed revenue basis. Special sales tax, SST, aimed at luxury goods and services like alcohol, tobacco, automobiles, and gambling. Rates vary widely, depending on the product/service. Import and export duties. Import duties depend on tariff schedules and international agreements, e.g., free trade agreements. Export duties are applied to a narrow range of goods, primarily natural resources. Environmental protection tax, levied on goods with environmental impacts, such as petroleum, plastic bags, and coal. Accounting in Vietnam. Vietnamese accounting standards, VAS, govern accounting practices. These are gradually converging with International Financial Reporting Standards, IFRS, with IFRS adoption expected to become mandatory for large public companies in the coming years. Key features of VAS, chart of accounts. Businesses must follow the prescribed chart of accounts. Currency and language. Accounting records must be maintained in Vietnamese and in VND, Vietnamese Dong. Financial statements. Required financial statements include balance sheet, income statement, cash flow statement, notes to financial statements, record keeping. Companies must retain accounting records for at least 10 years. Accounting period. Typically, the fiscal year aligns with the calendar year, January 1st to December 31st. Companies may adopt a different fiscal year with approval. Audit requirements, mandatory for foreign invested enterprises, FIEs, listed companies, and certain other entities. Audits must be conducted by licensed Vietnamese audit firms. Tax filing and compliance deadlines, CIT, annual declaration, with quarterly provisional payments, VAT and PIT, monthly or quarterly filing, depending on revenue thresholds, financial statements, annual submission to tax authorities. Vietnam's human resources and employment landscape is characterized by its dynamic labor market, youthful workforce, and rapid economic transformation. Population. Vietnam has a population of over 100 million, with a significant portion under 35 years old, providing a large and youthful labor pool. Labor force participation rate, high, particularly in rural areas where agriculture is a significant source of employment. Urbanization. Rapid urbanization has shifted labor from agriculture to manufacturing, services, and technology sectors. Youthful talent. A high number of university graduates enter the workforce each year, with growing skills. In IT and engineering, there are some challenges in human resources such as skill mismatch, gaps between education and the needs of the labor market, wage pressure, rising wages in urban centers due to competition for skilled labor. Labor union activity. Employees are increasingly aware of their rights, leading to more organized actions to address grievances. Vietnam is poised for continued growth, with sectors like technology, renewable energy, and e-commerce driving employment opportunities. However, addressing challenges like skills development, infrastructure, and wage growth will be crucial to sustaining this momentum. Vietnam is a dynamic and promising market for foreign investment, but success requires a thorough understanding of its regulatory and cultural landscape. Engaging with local experts and staying informed about policy updates are key to navigating this vibrant market effectively. Thanks for watching this video.